Hi everyone. Once again, welcome back to today's episode. So we are looking at this week in perspective, what has transpired over the week. See the probable trades that actually came up over the week. Just like what I told you before this week began, that I had maintained a bearish market scenario. All right. I believe that if you did follow my video that I posted last week, you probably have gained some important nuggets from this previous week's episode. So we go about with today's video, and prior to the video, I've already indicated some areas of interest and of concern. I've indicated this fair value gap right in here. This is the daily time frame, so we are looking at month by month interval. Okay, so this is an entire month. Okay, so this from this line delineated here all the way to this line represents 1 full month. Okay, and we are looking at this fair value gap right in here, that this month price traded all the way back into this fair value gap, and then we saw a rally away from this fair value gap, and all that is happening on the chart. There's another fair value gap right in here that we could see how price actually did all this form of consolidation around it. Okay, so this fair value gap was also an important fair value gap to be considered. All right, which in a way has acted as an inversion fair value gap for us to push price down. All right, so quickly I want us to go down to the weekly time and the 4-hour time frame, and then see for ourselves what has really transpired in the course of this week. Okay, so in the course of this week, this is what you on the chart. You can all see the price action prior to the entry of this week was this consolidation before we had the market surging up higher a little before we had this quick rally down. Okay, so from all this area we had to see price consolidating inside of this area. With this consolidation right in here, I was able to, last week's chart, I was able to give you a few entries that you could have taken, okay, which would have been a very profitable trade for most of you. All right, you only exited at the right point. All right, so for instance, all this area was an area of consolidation. Okay, all this area, so I delineated the consolidations high and then the consolidations low. All right, so that you can clearly tell that all this entire area is part of the consolidation. And when we had the consolidation, we had price at one point expanding or retracing a bit higher, and this retracement leg is actually the manipulation phase. Okay, and then we have the expansion. On the normal, when we are looking at ICT's style of trading or ICT's strategy made us understand that when we have a market consolidating, and for example, we are in a bearish situation, the market doesn't reverse after consolidation. Okay, so if the market is going to reverse after consolidation and break this high, it's never going to happen. Okay, so anything you see that is going opposite direction of the consolidation or opposite the direction of the entire bias, then it is a manipulation phase. Okay, so this leg you see here, or this area you see here, is the manipulation phase that was used to sweep all the buy side liquidity resting above these highs, and then it swept the high resting in here and then traded almost into this area, and then we saw the rally away. Okay, so now beautifully we see price break down further and then comes down all the way into this area. All right, now another important area that I've also delineated or outlined is this fair value gap right in here. So when we began the week, okay, we saw this fair value gap popping up in here, so I delineated this fair value gap in here, which overlaps with that fair value gap, the monthly fair value gap that we saw. Okay, that price had to consolidate all around it. Okay, so now we have this fair value gap overlapping with this particular fair value gap. So when price does this, goes up here and comes back trade beneath this area, then we know that we are heading downwards. Okay, so beautifully this is what price did. Even if you were in market and probably were confused all this while, after the consolidation trades up and then it comes into this area, could you probably have found a trade? Yes, it's possible. Now let's look at this. Now another important thing I would want you to know is that anytime we have market reversing or retracing, sorry, not reversing, retracing above a consolidation and it is not going in the direction of the trade. For instance, this is not the bias. The bias of the market for the week was bearish. Okay, so all this is the manipulation phase. Anytime we have price going above it, we want to see a point where we'll have the market breaking structure and then we want to engage. So beautifully, we had a swing high in here, swing low, swing high in here, and then a swing low. We didn't break this low in here. Market retraces, goes up, sweeps the buy side resting above this high in here into this other block, and then we break down further, breaks this low. So beautifully, this is where we have the market shift structure. Okay, the market shifted structure right in here. Okay, so if the market shift structure right in here, now we want to see market retrace a little bit higher. Okay, so market does the retracement a little bit higher here and then breaks down further here. Okay, now what this means is that and then so what it means is that if price breaks down further here and comes back all the way above it and sweeps it, it means that this high in here and this low in here has been, both the buy side and the sell side have been taken. So the buy side swept, the sell side swept. It means that in actual fact, if we are going to look at the swing, then we are going to consider the swing from this high all the way to this low. Okay, it means that this low probably might not be regarded as a low that was used to run this bullish movement, okay, to shift the structure. So now the shift in structure happens. Yes, you see it happen in here, but the leg that will be considered, let's say, for a retracement upwards is going to be this particular leg in here. Okay, so you could see clearly how if we are moving from this high to this low as the swing that was used to run this low, now if price retraces back into 50% of the market, you see clearly that this is what happens. Price retraces 50% into the market and then we had market breaking down further and down, and then it continues to rally down further. So you could have even seen the clear picture from this side and then also join the market right in here, and then you could have rallied down. Alternatively, looking at this overlapping fair value gaps right in here, and then we are going to look at how we could have probably also entered in here somewhere inside of this fair value gap. Now we could see when price traded up below this fair value gap in here and then closed below this fair value gap. And now watch this. Let's go down to our 15 minutes time frame and see if we had a very clear picture in here. So now price trades up in here, comes down all the way, breaks beneath it, and then reverses into where, see this swing high, it trades into this fair value gap in here, which is also another a tiny fair value gap, which overlaps with this monthly, the fair value gap we identified on the weekly time frame, on the daily time frame for the monthly perspective, as well as on the 4-hour time frame for the weekly perspective. and now we're having a very tiny fair value gap in here. So this one becomes where you actually want to also give it a shot. Okay, so beautifully you can see how price trades into this fair value gap, and then it bounces off and then trades and comes close below the other bigger fair value gap. Now see how price traces and go and bounces off exactly at the tip of the weekly fair value gap, and then we see price breaks down further. So beautifully, if you were in the market and you couldn't even see this high and lows and all that, you could have also seen this structure, and then probably you could have also joined the market. Well, I had a trade. I was in the market, I had an initial trade in here, which I was stopped out here. Just as when it did a reversal, I didn't give up. When it came in here, I gave it a short in here, and when I missed this particular point, but when it did the 50 and then it retraced, I saw that price came back also into this fair value gap, and then I gave it a short in here, and I took off all my others right as at this point. I could have still held on to my trade and taken them somewhere lower, but I mean, I knew why I had to take off at this point. Okay, so we are saying the things that we do. Okay, we don't just see things that we don't practice. All right. So beautifully, that is one of the things that really transpired on the market. And one of the things you guys should know is that don't always think that the market is every day presenting you with opportunities to trade. You can actually have opportunity to trade every day. Okay, you can have opportunity to trade every day. For instance, this fine tiny fair value gap in here could have given you another opportunity to enter. Put your stops above the fair value gap here, this high, and then you are good to run this marathon. Okay, that is if you were even trading for today. The previous day you could have seen this high being swept. For instance, the previous day you could have seen that there was a shift in structure, let's say somewhere in here, and then the reversal back into 50%, and then anywhere above this high you could have given it a short, your stops above this high, and then you can even aim for this low. So now your trade becomes 25. So you are aiming at a stop of 25%, and then you are aiming at a profit of 50. Okay, so you are risking so it's 1 for 2. Okay, you are risking 1 for 2. As beautiful as that. You could have taken a trade in here, put your stops above this high, and then aim for the low resting in here, and then it would have been a very beautiful trade. So basically, that is what has been transpiring on the market for volatility 75. I know for most of you who have been on the channel for a long time, you can attest that I always want to give you what's going to transpire. Now let's look at what we are envisaging that is going to happen. So for instance, now that we've had the market do all this from this high all the way, so this is an expansion leg. Okay, this is an expansion leg. So what I am going to expect is that once the expansion leg has happened, I'm going to expect price to do a form of retracement a little bit backwards. Okay, so now this is where we'll consider this from this high to this low as the dealing range, because we've swept the buy side, we've swept the sell side liquidity. Now we are looking at the retracement. So should price retrace, look at where we are envisaging. We are looking at 50%. 50% still lies inside of this fair value, overlapping fair value gaps. Okay, so should price commit itself and come back all the way into this area, we will look carefully and engage when we see a very clear shift in structure, either on the 15-minute time frame or on the 1 hour time frame, and then give it a shot at another overlapping fair value gap that probably may happen within. Right? And we want to see price rally further down. All right, so At this point, if you can find a trade rallying up, yes, you can trade a retracement leg, but I don't really enjoy the retracement legs. I rather prefer the expansion leg. So I rather want to wait so that if the price come back into this area, then I'll know how to play my cards. So this is the little that I have for you for tonight. I wish you all the best in your trading and enjoy the rest of the day. If you are new to my channel, please do well and subscribe. Keep watching the videos for more updates. Like, comment, let me know if you have any question so that I get more motivation to give you more updates. I wish you all the best in your trading. Do enjoy the rest of the day. See you.